This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management is pleased to be one of the founding members of the Trade Finance Working Group launched on the 27th of January 2023. Created under the auspices of the Alternative Credit Council and AIMA, the Alternative Investment Management Association, the working group brings together alternative lenders in the trade finance sector to support the development of trade finance as an asset class, with the remit to raise awareness of trade finance amongst investors and address challenges to greater participation by alternative lenders in the sector. Joining this group aligns perfectly with TradeFlow's experience in this asset class and its mission to help reduce the growing trade finance gap faced by SMEs.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Indian refiners have begun paying for most of their Russian oil purchased via Dubai-based traders in United Arab Emirates dirhams instead of US dollars, four sources with knowledge of the matter said. While Western sanctions against Moscow are not recognized by India, and purchases of Russian oil may in any case not violate them, banks and financial institutions are cautious about clearing payments so as not to unwittingly fall foul of the many measures imposed against Russia following its invasion of Ukraine. Indian refiners and traders are concerned they may not be able to continue to settle trades in dollars, especially if the price of Russian crude rises above a cap imposed by the Group of Seven Nations and Australia in December.
Oil prices fell to over three-week lows on Friday in a volatile session, after strong U.S. jobs data raised concerns about higher interest rates and as investors sought more clarity on the imminent EU embargo on Russian refined products. Brent crude futures fell $2.23, or 2.7%, to $79.94 a barrel, after rising to a session high of $84.20. It hit a session low of $79.72, its lowest since January 11. U.S. West Texas Intermediate Crude, WTI, ended down $2.49, or 3.3%, at $73.39, after trading between $78 and $73.13, its lowest since January 5. Brent registered a 7.8% decline this week while WTI dropped 7.9%.
Moving on to the top news in the energy sector.
Russia's monthly budget revenues from oil and gas fell in January to their lowest level since August 2020 under the impact of Western sanctions on Russian exports, Finance Ministry data showed on Friday. Monthly tax and customs revenue from energy sales was down 46% in the space of a year, reflecting the fact that, while the price of the global benchmark Brent blend was little changed, the average monthly price of Russia's Urals blend URLE was down 42%, according to the ministry. Moscow relies on its multi-billion-dollar earnings from oil and gas sales to fund its budget spending, and has been forced to start selling down some international reserves to cover the shortfall.
State firms from Iran and Venezuela will start in the coming weeks a 100-day revamp of the South American nation's largest refining complex to restore its crude distillation capacity, four sources close to the plan said. The effort by state oil firm Petróleos de Venezuela, PDVSA, and the state-owned National Iranian Oil Refining and Distribution Company, NIORDC, to boost fuel output at the Paraguana refining center marks a step toward ending Venezuela's reliance on U.S. refinery technology, the sources said. Venezuela, which has the world's largest crude reserves, has struggled in recent years to produce enough gasoline and diesel due to refinery outages, a lack of investment and U.S. sanctions that create obstacles for imports. Long lines at gasoline stations have been common since 2020.
Next, we have the top news in metal markets.
Russians bought an all-time record number of gold bars in 2022, Finance Ministry data showed on Friday, as tax cuts on precious metals encouraged people to stock up on bullion as a safe asset. Moscow scrapped its 20% VAT on physical gold trades for individuals last March in a bid to draw people away from using the US dollar as a safe haven. It also exempted people from paying income tax on profits gained from selling gold bars, further boosting demand for the metal.
Production disruptions in major copper-producing regions Latin America and Africa have raised the stakes for a tighter market this year, but analysts say it is too soon to downgrade forecasts for global supplies. Interruptions to supplies in Latin America combined with the easing of COVID measures in top consumer China fueled a rally in copper prices last month, taking them to a 7-month high of $9,550.50 a ton. Peru, the world's second-largest copper producer, has seen social unrest escalate since early December, with key mines such as MMG's Las Bambas and Glencore's Antapaque hit by road blockades and attacks by protesters. We will now look at the top news in the agricultural world. Food prices fell in January for a 10th consecutive month, and are now down some 18% from a record high hit last March following Russia's invasion of Ukraine, the United Nations Food Agency said on Friday. The Food and Agriculture Organization's FAO price index, which tracks the most globally traded food commodities, averaged 131.2 points last month against 132.2 for December. It was the lowest reading since September 2021. The December figure was revised down from an original estimate of 132.4.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.